So for those of you that haven't heard my yearly trading roadmap that I actually did last week, so I didn't do a weekly one, I did a yearly technical trading roadmap. You should definitely check either the Futex Live website, or on, if you're on YouTube, just check through our videos. It's a pretty in-depth, larger time frame view of what the markets are set up like in 2016. It'll give you a little bit more context as to what we're talking about in this roadmap ahead. So what I'm going to be covering is the event-driven risks, take a look at a little bit of our risk and money management for the week, and then take a look at a couple of different markets. We're going to try and skim across some FX markets, some equity markets, and some commodities as well, before actually looking at the two main markets that I trade and I usually go through in my weekly roadmaps. That is the Bund futures and the Eurostoxx 50 futures. So first and foremost, just to cover what we're actually looking at this week in terms of event-driven risks. Monday's actually looking like a very quiet day, so we don't really have much going on. We've got the Fed's Lockhart and Kaplan speaking. Kaplan speaking much later in the London trading session. That's more 10 o'clock, so really nothing to trade at that hour. Actually, even past U.S. hours, really. But in any case, not much events, no data points, low relevance. I'm giving myself 15% risk allocation. Now, actually, if you take a look at my risk allocation, the majority of my risk towards the end of the week. However, I just wanted to make this note while we're on Monday. The markets are set up very nicely, even though we had NFP on Friday, and notoriously NFP Mondays or post NFP Mondays, we get low volume. The markets are set up in areas that could trigger some intense flows. So whether it is a post NFP Monday or not, I'm not really concerned about that. I'm giving myself 15% just in case it is low volume. But if the markets start moving very, very quickly and there's volatility, I'm going to shift this risk allocation much higher, because I would feel there's a lot more opportunity in the market. So do be aware that the markets are set up currently for potentially big moves. You know, in either way. So we'll take a look at those markets in a little bit. Coming into Tuesday, we've got the UK industrial production and manufacturing production, and the Fed's LAC are also speaking. Again, not much going on really. Low relevance, 15% risk allocation. Wednesday, we've got the Eurozone industrial production, the Fed's Rosengren and Evans also speaking. Again, I've given that quite a low relevance and 15%. So overall, Monday to Wednesday, 15% risk allocation on each day. And when I say, for those of you that are listening to this for the first time, when I say 15%, it's overall if I'm risking either, you know, $1,000 or $5,000 or whatever my risk allocation for that week is, I'm giving myself 15% of that risk for the week set on that day, such that I can manage my money throughout the week and not hit my stop, my weekly stop by day one. Effectively, I've got chips to play with on each and every day. Moving into Thursday, we've got the Australian employment change slash. Sorry, I didn't have a slash there. German GDP. We've got some of the main events here. UK. Sorry for the UK. We've got the BOE rates, the Bank of England rate decision. So, just want to see how the rhetoric is shaping up there. When we take a look, actually, at the pound. The GBP is actually looking particularly bearish against the dollar, so we'll take a look at that chart for you guys and see how that's shaping up. Potentially, if we do get any further dovish rhetoric, maybe that might send this in a bit of a free fall. So keep an eye on that for this week. We've also got the U.S. initial jobless claims, the ECB minutes, which obviously last ECB we actually had a bit of a disappointment for the market. Even though they did extend QE in duration, it didn't bolster the size of QE, but any sort of if we get any sort of indication that they were kind of on the fence with increasing the size and potentially something, if there's actually room to do that ahead, maybe we might see some market moves on that. But really, the ECB minutes haven't really been that important until now. So we'll take a look at how that pans out on Thursday. We also have the Fed's Bullard speaking on Thursday. So overall, I've given myself pretty high relevance for this day and 35% risk allocation. And then moving on to Friday, we've got the U.S. retail sales, the main event of Friday after before the Empire PPI, industrial production, University of Michigan consumer confidence, and the Fed's Dudley speaking on Friday. Again, quite a high risk allocation, giving myself 30% risk allocation for that day. Again, just want to reiterate, this is it's preliminary kind of risk allocation. I'm giving myself a little bit more flexibility with my risk in case the markets do just wake up and move really, really quickly. What we do want to be paying attention to, which I don't have in here, is China. China is extremely, extremely important right now. The markets have been very, very volatile. Last week we saw a halt in the Shanghai Composite Exchange. It was down 7%, over 7%. The market had to close because it was moving so quickly. And I just want to again state how important it is that we keep in tune with this. China is the second biggest economy in the whole world, and they're seeing volatility. That much volatility in their markets. We need to keep our eyes open because effectively it is on the other side of the world for some of us. Some of us that are in Asia, they're kind of experiencing that more freshly. But I think within this side of the world, where we are in Europe and possibly even in the States, market participants aren't really talking about this quite enough. I feel as if they should be a little bit more around this. People should be a little bit more worried about this situation, because effectively if these guys continue on this large devaluation scheme that they've been doing. Last week we saw some aggressive devaluation in the Chinese renminbi, or the yuan, and that's one thing I really want to hone in on, especially now. Let's just quickly take a look at that, because if we take a look at some of these FX markets before we actually go in to the other markets. The very first market I just want to take a quick look at is the daily structure of the Chinese yuan. This is the offshore yuan. This is traded in Hong Kong. It's offshore. Speculators can trade this. Those outside speculators from outside of China cannot trade the onshore yuan. So that's why we've been seeing actually a pretty wide spread being built between the offshore and the onshore, because the speculators are speculating that there's going to be further devaluation. And I'm not surprised that we're seeing that, because effectively if we just take a look at what's been happening since the beginning of the year, this is where we opened. On a daily chart you could see we've been moving quite aggressively to the upside. Now remember, where we're trading on this currency pair is, we haven't been at these levels since, really, as you can see in here, you can't see the bottom of this chart actually, but down in these areas, this whole area in here is 2011. So we haven't been we're trading at levels above where we were trading in 2011. This currency pair has moved very, very aggressively. Again, reiterating, second largest economy in the world. It affects global trade, guys. I mean, China's a huge exporter and also a huge importer. So you've seen a lot of companies within Germany, the automakers, Volkswagen, they've been getting hit very, very aggressively now, because a large majority or a big chunk of their sales is to China, and the further their currency gets devalued and the less they can buy with that currency, it's going to affect those stock prices in those countries, or those that export to China. So do remember, this is very, very important, guys. Please keep a chart of this up. If you can get a chart of the yuan up, keep it up, because when this is trucking and moving very, very quickly, we're getting risk-off moves as of late. So just keep a very, very close eye as to how this pans out this week ahead. Just taking a very quick look over to some of these other currency markets for you guys. I just want to take a quick look at the euro. We did go over this in the weekly wrap-up last week, but for those of you that aren't subscribers of FewTex Live, you wouldn't have heard this. I wanted to go through this anyway, just because it's kind of setting up in such a way. We had this initiative move to the upside. We have flagged on a weekly. This is a weekly chart of the euro USD. We false broke, closed back inside here. And now we're effectively testing the other side of that flag. Now, I want to make this very, very clear. This candle right here is bullish, because it failed to close below, and it got back inside this range, as you can see in here. Now, for this to actually show initiative buying, we want to see buying above these highs, particularly this high and this high. If we see buying above these highs, then we can launch from this area. That means we need to use this whole boxed value area as a base, if we can use that value area as a base, then maybe we can launch. Until such time, we have to wait and see. Yes, it is a bullish candle, but don't get too ahead of yourself now, because this could also be seen as a hammer of death, HOD pattern, which is something that one of our traders here, Futex, Wackass, loves to trade. He's, we had that pattern a couple months back in the S&P, and it worked a charm. We had this hammer of death, and then the market just, when it started rolling over and taking out this wick area, sorry, just bear with me, this little wick area, when it took out this wick area in here, it just really reversed very quickly. And that's because most retail traders, most traders are going to be looking at this candle and say, okay, that's quite a bullish candle, but essentially they'll be buying in these areas with their stop below here. If this starts moving quite aggressively back down, effectively below this low, it could really speed up. So there is scope for both sides. Initially this looks bullish, but remember, until we get above these highs in here, you can't really be effectively, I wouldn't be too keen on buying in here just yet. If you were buying in this area when we closed back inside in here, and you were targeting the other side of the flag, that is a decent trade in my opinion. But we've already tested the other side of that flag, and now you have to wait and see, in my opinion. So that is how we're shaping up in the euro versus the dollar. Now, as I promised, I'm going to go really quickly through the pound, so the cable. This is our cable chart, the pound versus the dollar. This is on a monthly, actually, so we're starting off with a much bigger time frame. But just notice in here, guys, how effectively, as you can see, this does look like we could potentially be rolling over. With this first initiative move back in 2008, 08, 09, this was our move to the downside. We've been just ranging in this area. We had this very large formation, as you can see in here, been drawn out. We false broke that to the upside, came back inside. Now we tried to test higher. We couldn't breach that area to the upside, and now we've rolled over. And now that we're rolling over, effectively, now that we're taking out this low in here, that for me is giving me a bit of a signal. It's popping up and telling me, okay, this could potentially be quite bearish if we can hold below this low at 145.49. If we can hold below that low 145.49, I think there's very good scope that we can test these lows in here. And like I said to the subscribers on Friday in the wrap up, this setup is looking very similar to what we saw in oil, actually, before we saw a very large collapse in oil. Obviously the context was a little bit different. In this market, we're seeing a move down into it, then we sort of have this big formation, and now we might be rolling over. Oil did something like this. It rallied, came down in 2008, 2009, came back up, and then did this for a very long time, then consolidated, and then effectively it started moving lower again. But we had a very similar pattern, because there's very many months and years of a consolidation in this area, and then we took it out. So the fact that we've false broken this to the upside, and now we're rolled back over, we're rolling back down, it's giving me a signal that we could potentially start rolling over here. So I really want to pay attention to this currency pair quite closely, because it didn't do much. It wasn't very volatile. It didn't do much in 2015, but 2016 could be its year. So we have the way we're shaping up right now. If I just point out just a little, obviously the very obvious levels, which is these weekly and I'd say probably even yearly lows here at 142.3 in the pound. Now that we're opening up, we've closed below there. The fact that we can, if we can actually hold below these areas, there is some scope. If we can hold below these areas, that we can test lower into these lows in here, and potentially lower. Obviously, if we can't hold, do beware that we might test higher. Again, this area is important to keep an eye on. The retest of that trend line, if we hold there, we might have again another rollover. And then obviously the other scenario is we get back inside this and hold for a move back up. But these are all scenarios, guys. You have to pay attention to them. The way this is structured right now, weekly, this looks like there's a lot of selling pressure. I wouldn't really want to fight the trend. So That is how we're looking in the pound for the upcoming week and possibly for the upcoming months. Keeping an eye on the yen. The yen is now set up for a very, very critical potential correction here. We see the very much a clean head and shoulders being built here. We've got this left shoulder in here, with the head formed in here, and now the right shoulder now formed in here. The first week of trade for the yen has been very, very strong. Obviously, this is the dollar versus the yen, so the USD JPY. So this is dollar weakness, yen strength. So what we're seeing here as it moves down is yen strength. The yen has been very, very strong. And if we compare that, overall we've been seeing some risk-off moves. This is really the only risk-averse or safe haven currency that's really been very strong. The dollar was actually relatively weak last week. The euro, was mildly strong, but I'd say this one is really showing me signs that it could potentially be really strong. Whether there's any fundamental reasons why, technically, I can understand. Again, we went through this in our yearly roadmap. We pointed out that we had this really big doji year, closed back below the high of the previous year here, and now we're slowly trickling back down. Now, if this is a case where we can actually hold our offer and get back below this little neckline, get below this neckline in here, once we start getting to these 115.82s, take this from this low up until this high, set that whole height as your target, and from here, extend that lower, and that's going to give you your head and shoulders target, wherever that may come in. I'm not going to do that measurement for you guys right now, but you can do that on your own charts. So this is how potentially the yen is also shaping up. Obviously, that's not a given. We could find support here and come right back up. But again, the first flows of the year are quite telling. It means that there's potentially people in there that need to either get out or get into the market. And they've shown us a hand. So don't fight it, in my opinion. It's something that you might want to actually play with. Now, moving over to some of the equity markets, I just want to take a look at some of the equity markets because they look relatively interesting. If we look at the stocks, which I'm going to go through, obviously the stocks, and the futures, but I want to look at the cash just to see how that's actually shaping up. And you can see we've got a number of head and shoulders patterns just all over the show. They're just popping up everywhere. Larger time frame topping patterns are basically popping up everywhere. This is one left shoulder in here. We've got another head and a right shoulder in here. We've now broken that neckline already. Do bear in mind, obviously, that these are larger time frame patterns. For those of you that trade short term, you can't expect it for it to just open up and just shank straight away. Obviously, you can do that. It's a scenario. These larger time frame setups, everyone can see. And obviously I'm broadcasting this to however many hundreds or maybe thousands that actually see this video. That's already a few people there. So if there's too many people seeing the same pattern, usually doesn't work straight away. But if it does hold below this area, I usually like it if we can hold below here, maybe build a few days, some inside days, a pattern that we can see and trade. Then a break of that might actually give us a move that's quite interesting. But last week, you could see the first week of the month was very, very heavy. People came in. We opened up at the high with a gap. Well, actually, in the futures, we had a gap, but we did have a gap on the futures, and we've just closed on the low. That is a Marabuzo. So if we do get a rally, look out for the 50% of this week. Look out for these lows in here for potential sellers to step in. That's how we're potentially looking like in the stocks. Now moving over to the FTSE. This is our FTSE weekly. Again, similar type of structure. I don't quite see it as much as a head and shoulders, but again, you could see it's pretty much topping. Once you start getting back below these lows in here, we could start opening up the way to the downside, which we've pointed out. We've got these double yearly lows here. 2010 and 2011 lows at 4791. If we can actually get below this level in here, which is our 2015 low, and actually hold below that, that'll give us some room to get through all this area. I don't see much holding us in the way if we actually make that move. Now obviously we could get down here, hold support, and then reverse. These are all scenarios, but I just want to keep you guys aware of the patterns that are actually building now in some of these equity markets. So I don't want you to get too excited to come in next day with a very, very bearish bias, but as it stands, the flows have been bearish. And obviously the king of them all here, we'll take a look at the S&P 500, which at the minute is looking quite interesting. So we've got at the minute, again, another head and shoulders pattern. You could see very clearly this is our left shoulder, this is our head. We've come really high on this right shoulder, but nonetheless that is our right shoulder. A break below this area, and especially below these lows at 1867, that could really open us up, to a move, possibly down to the 16 or 1500s in here. So again, very similar. Take that height, extend it lower, and that should give you your target. So that's how we're working now. Obviously, again, I just want to reiterate, we have closed very bearishly. If there's an area that I would like for very, very good risk reward on a longer time frame basis, I like this area because you could see this is previous little box value area in here. These are the highs that we kept holding. We held that low back in there. If we can get back above, trickle up, hold that area, that is a pretty nice little area, I think, for a good risk reward type trade. Your stop, you don't really have to have such a wide stop, because you're not looking for it to get back here. Effectively, that's your biggest time frame stop, but you could probably find an area somewhere above these areas in here where you could have your stop and have a relatively prudent stop on that for a profit or a reward, at least down to these lows here. So that's potentially where we're looking like in the S&P 500. Again, let me just remind you guys that last time we had a very, very big move in the markets on a Monday. I believe that was the 24th of August, where we actually had what some people called that flash crash. It was this day in here. So that was actually, what shows up as the 28th, but yeah, it was the 24th. This was the close of the week, but it was the 24th, I believe, Monday, and a very, very sharp move down in the S&P 500. So is there a chance that we might have that on Monday? We'll wait and see to see if that actually happens. But nonetheless, that's how the market's shaping up. Some of the equity markets are shaping up coming into the week ahead. Now, if we take a look at some of the commodity markets, just quickly take a look at gold. Gold's had a very strong week, so keep in mind we've had some strong support in a very, very key area. This area in here, the tops of 2008, 2009, this whole area, and that low there, that yearly low in there, that's offered us some initial support. Now remember, this is a bit of a falling wedge pattern. I described this also in my yearly trading roadmap. If we can get back above and close and break this area, maybe we might get a reversal, but as it stands, we're still not there yet. You really have to see a break of these highs to change this short-term, or actually medium-term bearish bias that we've been having in the gold market so far. So do keep an eye on gold. It's had a pretty strong week. I'd like to see if this flow actually does continue, if it's potentially the risk-off flow at the beginning of the year. If we could take a look at last year, this is our opening weeks last year. You can see very strong 2 weeks. So is it like last year where we were just getting the first 2 weeks of very, very pertinent strength and then a bit of a reversal? We'll wait and see, but that could be a pattern that's playing out again this year, so just keep an eye on that for some further moves. Looking at gold at the minute, also weekly pattern, falling wedge pattern. We've broken below it. We've slightly taken out. If we take a look, these are, if we just scrunch that up, and this is the pattern I was talking to you about before, guys. We had that large move up, the fall in 2008, 2009, then we came up, we had this very big range in here. This was our very big wedge formation. We broke that and we collapsed. Slightly different context. Obviously the pound has come into it like this, and then we've got this formation, but similar. Pay attention to these patterns because they sometimes play out. Now we've slightly taken out The lows are 2008, 2009 at 32.40. We haven't quite closed below it. We just kind of blipped through it, came back inside. We had a bit of a reversal pattern on the daily and just kind of, we had a bit of a reversal pattern intraday on Friday, which took us slightly a little bit higher, but nonetheless we're still not holding below those areas. That's a pretty crucial area, I would assume. If we can actually start building value and holding below that area, then we're really looking at potentially some of these areas below here. We've got marked here at let's just at 26. We've got this area here at 26.80. These previous lows in here, this whole cluster area in here, potentially that's an area we should be looking out for. And then through there, obviously, there's going to be a lot more to look at, but not really within the scope of this roadmap. What I'd like to point out, obviously, is, again, like I said, I like these formations, these falling wedges, as reversal patterns. So if for whatever reason we can find a bid and hold back again into this pattern, look out, because potentially you might see that move back up to the other side of the wedge resistance. Again, if we break that and break this high in here, I wouldn't be surprised if we see a very sharp move up. What potential catalyst could cause that? Well, I'll tell you right now. Iran / Saudi Arabia. Now, I don't know if you guys are aware, obviously these guys have been having a few difficulties. Saudi Arabia killed one of their ministers, not one of their ministers, but a very prominent Shiite minister, Al-Naimi, or whatever his name was. I can't remember his name very specifically, but most people in Iran are really quite angry right now. They've been throwing protests, they've been burning down the Saudi Arabian embassy, they've cut off diplomatic relations now with Iran, the Saudis have. Some other countries have. Now, this is basically a scenario that's heating up. This is geopolitical risk right now. Geopolitical risk. As this heats up, I think oil is going to slowly start paying attention to it. Now, if for whatever reason we actually get some sort of indication that these two countries are going to go to war, or there's attack on one another by the government, not just by some militant group, and we're talking governments, whatever might happen in those situations where we get some sort of war breakout between these countries, I really would not be surprised if oil could rally, 20, 30%, maybe even 50% in the matter of like a week or two. So just be really careful. This situation, as it heats up, is going to be more and more important, because Saudi Arabia is the biggest supplier in the world of crude oil. Iran is not the biggest, but they do supply a large amount to the world. So if for whatever reason there's some sort of risk in this area, I remember the last time we had this risk of them closing the Strait of Hormuz. When was it? Probably 4 or 5 years ago. I can't remember exactly, but when we had that risk of them closing that channel, oil was it was going mental. Basically, it was rallying every time we had some sort of news come out. So keep your ear to the ground on this, because if for whatever reason we get that and we get a huge rally in oil, that's going to feed over into all of the other, the oil majors, all the big companies. The FTSE's probably going to rally like crazy. You're going to see all the oil majors in the States going to rally. The oil companies that are in the Eurostoxx 50, basically the whole energy and mining complex that is going to rally with oil if oil just starts rallying like crazy. So keep an eye on these situations. Obviously, you can't be too bullish this market, but I'm keeping my eyes open. We've come into multi-year support at these areas. If we start reversing slowly, it'd be interesting to see how that plays out. So just keep your eyes and ears open. Now, moving over to the last market before we actually take a look at the Bund and the Eurostoxx is the copper market. Copper, just want to point out one small thing before we move on. It has a weekly flag. This is our weekly flag formation. We broke that last week. We did take out the low over here at basically $2. We traded briefly through $2, closed back above it. That is a flag confirmation. The fact that we haven't closed below it, okay, it's not the most bearish thing in the world, but so long as we can hold below this flag, if we maybe trickle up and hold that, we could continue down. This already has the impetus to the downside. That is our flag pole. That's our flag. So you want to take this height and extend it from this area to the downside. It's probably going to take us to around the next area that I've been mentioning for a while, is around the 162 level. As you can see in here, that's a kind of a multi-year support and resistance area. You can see quite a few battles have taken place in this area, so potentially an area that we could see some support in case we get down to those areas. So that's how copper's playing out for the weekend. So let's quickly move over. I'm just going to move over to my team viewer and pull up some of my charts. I just want to point out some of the charts in the Bund and the Euro stocks. So for the Bund weekly, now keep in mind for the Bund weekly we actually took out, let me see if we just get this to move a bit. Okay, we took out, it's like a multi-week consolidation area. You can see this whole area in here. We've been sitting in this area for a very long time. It's basically this very large coil. We had this buying tail, initiative buying, came into the market, lifted us higher. We've now found value higher. So we found value higher. This is our value area from 159.90 to 159.11s. Our VPOC of last week is at 159.69. So given the structure right now, it's very difficult to be that bearish. We've had initiative in the market. The market seems to want to move slightly higher from here. We've found value higher. I'm looking for any potential bullish setups. If we let's say open up in these areas and we hold above last week's VPOC, I'm looking for, let's say, a move back above these, or back above these 159.90s. If we can hold above there and actually build a bit of value above there, then potentially we're going to try and test, well, the weekly highs here, which I actually have coming in at around 160.20, but I'm actually looking at the 160.25s, because if you guys had gone through my yearly trading roadmap, you'd notice that's actually a monthly inside month. So we have an inside month high at 160.25s. If we break this, you never know how far we could really go. There could actually be some really decent upside. So bear in mind, if we take a look even if we take a look on the 60-minute chart, you'll see, which you can't actually see the bottom of this chart, which is a shame. Let me just try and just bear with me a second while I try and make this a little smaller for you guys to see. Anyway, before I can't seem to make that work, but what I wanted to point out is the fact, obviously, we've had all that holiday volume, which hasn't been that much. We broke out in here. We saw some good volume of the breakout here. And then on NFP, we saw actually some decent buying volume. We tried to breach below this trend line, and now we've moved up. Now, what is that trend line? I'll show you just in a second. So if we make this a little smaller, you could see this is quite an important, well, like we said, it's been coiling for quite a while. This is how the market shaped up. We've got this very important trend line. We had the breakout this week. We came in, retested, held, came up on the NFP. We held again, and now moved up. That's two times we've tried to break through this area, and we haven't been able to. So, like I said, very difficult for me to stay bearish this market. Now, once we get back above these highs, you can see these whole cluster of highs in here. There could really be quite an explosive move to the upside. So just bear in mind, if we open and just start trucking to the upside, try not to stay in the way of that. Try not to find, an area to, to fade for 2 or 3 ticks when you're getting flow, you're getting initiative buying coming into the market. Now that's not a given that we're going to move higher, but the market seems to look like it wants to. It's giving me the signs that it actually does want to move higher. So I'm going to try not to fight it next week if I do see the flow. Bear in mind, we also have an inside day. So the NFP, we did some decent volume. We also have an inside day. The inside day high is at 159.85s. Inside day low at 159.07. The value area high of Friday, basically the previous day's trade, is 159.62. So if we do potentially come hold this area, then we might be looking to move higher. If for whatever reason we get back inside here and hold in here, well, then you're at least looking for a test of these 159.40s, and definitely looking for a test of this area in here. It's just, I think it's around 159.16, the lower end of the value area of yesterday. Obviously, if we take this area out, 159.07s, that could change the picture a little bit, because now we might start breaching back into that big coil that we mentioned before, in which case a lot of these short-term longs might have to cover, and we might actually see some decent downside there. So there is scenarios on both sides. Like I said, market seems to want to move higher, but we should keep an eye on both scenarios next week. Moving over really quickly to the Euro Stoxx, so we can close this up. We've got, this is the structure we have on the Euro Stoxx. As you can see, the Euro Stoxx actually opened quite high. This is the gap that I spoke about before. Let me just move this here. This is our gap. So we have our closing gap here. This whole area is our gap. And as it stands, we still held that gap. We came in, we had initiative selling, we left the single print, and we started trending lower. We started trending lower, finding value lower, and now we've left this profile. So the volume value area high of last week comes in at 31.46. The volume value area low is at 30.22. So I'm going to keep a look at these little levels, because they could be quite important. If we take a look at the close I've got coming in at, well, about 3,000, probably. It's probably 3,001. Yeah, 3,001. That is our close of last week. Quite an important level, because effectively, if we do open anywhere around here, we're going to be opening up outside of value. If we open outside of value, possibly we'll test the value area low of last week. This is where you want to, keep your eyes open, because if the sellers step in early here, that could mean that we're going to really start trucking to the downside. If for whatever reason we can get back up, hold within the value of last week, at the very least, we're testing the VPOC at 30.40. If we start holding above there, then we might start looking for a move back higher, potentially to test the value area high of last week, which we said is at 31.46. But I would keep in mind that 50% at 31.04 looks pretty juicy. If we just move that across, 31.04 area, just above it and just below it are some pretty decent pivot areas. If we can just get there sometime today. There we go. So you can see this whole area. Let me just quickly make this a little bit smaller so we can just see this a bit better. So this whole area in here, you can see, has been quite an important pivot area. So we have 31.04s just above it, value area high, just below it, value area high again. We also have these lows here, I think, come in around 31.12, and these lows again just around that area, 31.14ish. So this whole area for me is looking pretty interesting. If we can hold that area to the upside, I think we could actually see some further downside, and some strong downside, because that's basically giving us a sign that we cannot hold higher prices. So that is potentially a scenario I'm looking at in the Euro Stoxx. Obviously, the scenario is if we actually hold below these 30.22s, so we said the value area low of last week, then we could actually start looking to test these previous areas. I have a little low volume node here at 29.82s. Going back on the profiles, 39.82 was actually a previous weekly VPOC, as you can see in there. You can see that was a previous weekly VPOC. It's also a low volume node. Potentially you might see a small move in that area, and obviously we've got these lows just spattered below before we get to the low of last year at 29.28. So I would be very, very cautious as to how the market trades when we get down there. You never know, we might actually have some stops below here. Obviously this is a very big level, so I wouldn't expect the stops to be 2 or 3 ticks below. If we're trading 10, 20 ticks below, then maybe start looking for some further downside. If we trade a tick below or 2 ticks below and you just don't see any stops and you're banging your desk, don't get too frustrated, because I'm sure, you know, Brevin Howard or whatever big hedge fund has put their stops. They're not going to put it a tick or two below the low. They'll give it a little bit of more room to breathe. So that's potentially how we're shaping up in the Euro stocks next week from a weekly profile. Obviously, we did take a look at the candlestick chart, and you saw that there was actually some good potential again in that market to the downside in the longer term, at least. Obviously, on an intraday basis, you know, if you're watching this video during the trading day and we're rallying, you know, 1 or 2% higher, that is obviously an intraday thing. We're looking purely at a slightly longer time frame to see if we can play with a longer time frame trend. Again, that can change, but the way things are setting up right now, it seems as if the market's somewhat shown its hand, at least for this month, or maybe potentially the next couple of months. So this has been a fairly long weekly trading roadmap. I wanted to go through a few ideas, a few things that I'm looking at, because the markets are moving, there is volatility, and there's a lot to trade. So I thought it was quite important to give you guys quite a holistic view of what's happening in the market. Hopefully you guys enjoyed it. If you guys have any questions, anything you want to talk about at any point in time, my Twitter handle is at MVS_Futex. Sorry about that, I'm drawing with a mouse. Futex Live. At MVS_Futex Live. You can hit me up on there if you have anything to say, anything at all. Really, we can discuss the market, we can discuss, well, at least, actually, let's keep it to the market. I don't want to talk about your personal life. But yeah, if there's anything else, hit me up on there. The rest of the week, have a good one. Good luck. Hopefully it's a profitable one, and we'll be speaking again on the Futex live stream in the week ahead. Thanks a lot for listening, guys. Bye-bye for now.